Good morning. It's Monday, July 8th, about 6 a.m. Central Time. Overnight, the precious metals are correcting after Friday's massive move up. I have to ask myself, can this rally hold looking at the week ahead? The catalyst for this big move up on Friday was the employment data. The headline number was 206,000 versus 191,000 expected, but really the devil was in the details. 70,000 of those jobs were government jobs, while 136,000 were private. The unemployment rate ticked up to 4.1% versus 4% expected. That's the highest rate since October 2021. Then you look at the details, you look at the previous numbers that had come out. I'm telling you, I really believe the government is really manipulating this data. The prior 2 months were revised down 111,000 jobs. They mark up these numbers, and then after they've been traded, they revise them down. I think that people are starting to really catch up to this, and that's why there's a 77% chance that the Fed cuts rates in September. The swaps are indicating 2 interest rate cuts, one in September and one in December. It was the massive move down that we saw on Friday on yields across all durations, while the dollar index broke the 50-day moving average and threatened to break from a bullish trend back down to a neutral trend. 104.50 in my opinion, and the dollar is the line in the sand. Now this week we're going to have some major economic data coming out. Today, a little bit lighter of a session, so its consumer credit will come out. Because of that lighter session as far as economic data, I believe that much of this liquidation here is merely profit taking as traders come back that we're not watching the screen and see that we saw this move up. We saw gold hit 2,400. We saw silver have a nice extension higher, 31.79 being that high tick on Friday. Now Tuesday, what you're going to want to watch is the Chinese PPI and CPI data. See if there's any major developments there. See if the Chinese economy is picking up and things like that. We want to see a bit of economic activity, really some stimulus over in China. Wednesday is going to be another critical move, and I think that's where the markets, especially the equity markets, are going to take some big stance, and we're going to see the reaction going across all the other markets. You'll have Fed speakers all day long, including Jerome Powell. He's most likely to say that they need further confirmation that inflation is slowing before they're able to cut interest rates when he speaks in Congress on Tuesday and then also on Wednesday. So small discussion on Tuesday. Wednesday's the one most people are going to be watching. Thursday, we'll have the CPI data and also initial claims. Make sure you look at that number, the claims data, see if it had another uptick above that 230,000 mark. Then Friday, you're going to have PPI and consumer sentiment. Now, Friday, you'll also have earnings kickoff with JP Morgan, Wells Fargo, and Citigroup. They're going to kick off the U.S. bank earnings season on Friday. Looking at the S&P 500, we closed at 56.21. It was a very strong close across most markets on Friday, while the dollar index was just slightly lower. Your critical level of support on the S&P 500, 55.80. Any kind of test, it's about 40 handles lower. We could see a small bounce back up to that 5600 to 5610. If we break below 5580, we could see this washout down to about 5525. You look at the NASDAQ, a lot of people questioning the strength of many of these rallies. This is one of the markets that historically has had a strong July and is in a strong bull market. I suggest that if you're going to attack the downside of any kind of indices, the preferred short by independent research analysts is going to be the Russell 2000. Your resistance point on the Russell is going to be 2670 to 2070 to 2090. If we get back above there, look for some kind of breakdown here back to the 200-day moving average at 1993. Something you want to throw up on the charts on the Russell is DMI plus and minus. You'll see that DMI minus is crossing above plus. You'll also see that the Russell has been fading and heading lower. When you get kind of this stagflationary environment, the Russell tends to be one of the most underperforming indices out there. So looking at gold and silver, gold broke back to a neutral trend. It was in a bearish trend for a small period of time. Not really any kind of major breakdown as 2300 had held. And then also you saw that number kind of creeping up. It was really the light holiday volume, which I tell you that I do not trust. I believe that holiday volume is, and also Sunday nights, are days for reducing exposure, taking positions off, harvesting some of the profits, and trailing some of the stops. I think that you wait for where the volume is at before you get the clearer picture of where the market's at. Call it the calm before the storm. You want to look at some of this holiday volume as a gift to take things off here. Now, it's going to take a close over 2403, which was basically the high on Friday, in order to validate and have a bullish trend in place. That's where we could start to threaten and take out some of the all-time highs here. Now, your critical level support, 50-day moving average. Throw that up on the daily chart. Comes in at about 23.62. That's going to be kind of your major level of support here at the moment. The gold market is down about $15 at the moment. The low was 23.76. High was 23.99. I expect the bears to try and defend the 2400 level unless we get some kind of material change in the economic data that's been coming out. The line in the sand for me, where I really question, is it back over again? Are we just now treading water? 23.17. So the number is rising from 2300 up to 23.17, but a break below that will dash kind of all recovery, all hopes of this recovery, and really send the bulls back to the sidelines. Now, silver triggered a bullish trend on Friday. That was one of the stronger performing commodities recently. It never broke on the metals complex back to a neutral trend because I believe a lot of speculators have come in there and they like to fight around these levels here when you get to another kind of whole new handle from the 20s to the 30s. They'll buy those dips below it and they'll look to lighten up once they get back over the $30 handle. In my opinion, I think it's still advantageous to utilize the options market to approach this market because of the fact that the chance that this market could correct down a bit steeper here. Your first major support on the silver market, it is about $1.50 lower. It's 28.84. The line in the sand here for that market comes in at 29.14. So we break below 29.14. I think that market could be over. In a correction, I believe I might have said the 50-day moving average, 29.84. That's where it's at. So you want to see these metals continue to work in a positive momentum to the upside, not have these 1-2 day rallies and then sell off. If you pull up a daily chart in the silver, you could see it did that on June 17 and 18th. It had that big breakup that was Juneteenth or whatever, and then, or I'm sorry, the 19th, and then it broke down hard. If you go back to June 5th and 6th, two big up days, big sell-off there. May 24th and 25th, two big up days and a big sell-off. So you want to see more than just 1 or 2 big days up in order to validate that a bull trend is underway. You got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.